Good morning. It's Wednesday, November 5th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So metals minute number 524. Looking at that gold market, selling off in the overnight session down to 39.3540 before snapping back. Came close to testing that 4,000 mark at 39.97 and sitting right at about 39.75. So gold futures are off about 9% here from their 52-week high up at 43.36, and that was on October 20th. Now, gold is rebounding here as investors are looking for some safety after the decline in the global stock market, which raised some concerns about elevated valuations. Now, it's important to note that from an investment perspective, valuation should just be considered one factor in a decision-making process rather than the sole basis for adding or reducing a stock. Now, December futures, they did rise close to that $4,000 mark after falling about 2% yesterday in the previous session as that US dollar strengthened. Treasuries also rallied while global stocks extended their steepest drop in almost a month. Now, gold's decline on Tuesday was influenced by also a trio of Federal Reserve policymakers who refrained from supporting an additional interest rate cut in December, and that weigh in on competing risks from inflation and also the softer labor market. So they're really looking at a couple different variables. Now, this week, we're going to have our opportunity to look and hear more viewpoints, and we'll have the St. Louis Fed president also speaking. Now, the series of remarks from Fed officials has offered some contrasting views here as far as what's next for interest rates after Jerome Powell last week warned that a December rate cut wasn't a foregone conclusion. So if you look at the CME's Fed Watch tool, be sure to bookmark that on your computer. That next meeting, the December 9th, 10th meeting, markets are now seeing about a 72.1% probability that the Federal Reserve will cut rates 25 basis points at that December meeting, and that's up from 66%, and that was after he spoke at that last Fed meeting a week earlier, and then we have a 27.9% chance that they leave rates unchanged, and that's all according to the CME's Fed Watch tool. Now you look at the silver market up about 11 cents here, kind of a wild range overnight. 46.52 on the low end, 47.77 was the high overnight. We're sitting at 47.72. So silver did lose about 75 cents here yesterday. It declined about 1.5%. It was the largest one-day dollar and percentage decline since October 27th. It's been down for about 3 consecutive sessions. So you look at the equity markets here. Equity's a bit of a mixed picture here. You got the Russell 2000 eking out a gain, S&P 500 down about 15, the NASDAQ down 100, the Dow Jones up about 10. You do have the FANG stocks underneath some serious pressure here. So S&P futures down about 0.2% and the NASDAQ down about 0.4%. We will have that ADP data coming out, and it is kind of a breath of fresh air here to see some economic data coming out because of the fact that, hey, I triple majored in finance, marketing, and economics. I like to see economic data come out here. So that is due out at 7:15 Central Time here. And we'll also see the S&P Global Services PMI for October follow and the ISM services. So that type of data here really kind of gives us a gauge as far as labor and also inflation. Now, we have seen some recent corporate cutbacks here, and it's a bit of a warning sign here on the jobs front. You've had Starbucks, Target, Amazon making some significant cuts out there. Now, you look at the macro markets here, dollar index here, unchanged, but at the 100 handle. So right up about resistance point here. And that's just something to note here, whether these markets are overbought, oversold. You want to put those in conjunction with other factors when you make your investment decisions. Now, this is bullish against the euro, the yen, the pound, and the Canadian dollar here, which make up most of the basket that is inversely correlated to the dollar index. You look at 10-year treasury yields, well, they are slightly lower at 4.07%. Currently, I believe taking advantage of the higher yields is probably one of your best trading opportunities because we've seen bond volatility continue to come down. You look at the VIX futures up 48 here, just over that 20 mark, meaning that we're going to see increased volatility here. And it'll give you better. You got to look at volatility as you're going to see wider ranges on there. That doesn't mean you want to be in there and just get chopped up left and right. What you want to do is you want to utilize the increased volatility, and you'll be able to buy more at your support levels and sell more at your resistance points much farther away here. So take advantage of the swings. Don't embrace the swings. Don't be fearful of it. So you look at gold volatility, that's also continuing to come down. Now, crypto markets, Bitcoin and Ether, you've got Bitcoin futures snapping back. That's down to about 99,285. Now we're at near the high end of the range here, up about $1,300 at 102. 102,400. High in the overnight session was 102,700. So Bitcoin is about 20% below its record high reached about a month ago, and it's parrying some of those losses here. Holders of the cryptocurrencies have offloaded about 400,000 Bitcoin over the past month, which comes out to about $45 billion. Now, if you look at Europe and Asia, European stocks, they extended that risk-off move here with really tech being the biggest laggers and then auto and auto parts leading the gains. The problem with Europe is they haven't really embraced AI. They're heavily dependent on exports to Asia-Pacific companies or countries, and then that's really the reason they just haven't made any of these advances. So if you look at their GDP, it continues to slide lower, especially in Germany, especially in Greece and other areas of Europe. And they're really the ones, if you're going to be shorting indices, you really want to look over to Europe because even their GDP is just really contracting quite a bit here. And it's not in negative territory, but it's just slightly elevated, and that's about it. Where US GDP continues to accelerate here with our job losses, giving us a great scenario here for a snapback and a continuation into 2026. Now you look at the Asian stocks, well, they're weighed in here with the sell-off as well, with tech and mounting concerns about valuations as well, because you look at their stocks like TSMC, SoftBank, Samsung Electronics, those were the biggest sellers in their market here. And the MSCI Asia Pacific Index dropped about 2.3% before we saw the dip buyers emerge. Now you look at the ETF flows in the metals, because this is where there's been some problems. We've seen, gold's up about 50% this year here, but the total gold held by the ETFs, it's up 16%, but it is at the lowest level since September 30th. So we'll see with this break below the 4,000 mark, will the dip buyers come into the market? Because the exchange traded funds, they cut about 220,000 troy ounces, again up 16% year to date, which is great, but we want to see it continue to broaden out here on who is continuing to own gold and add it to their portfolio. So you look at silver, well, they added 741,000 ounces of silver in the previous trading session, and platinum continues to be negative, down 2.8% year to date for ETF flows, and they're selling more of that as well. So platinum down at 1529. We'll have to look at the chart back here. If you haven't done so, register for it, and then we can look at where those support and resistance levels are on that. You got the gold silver ratio sitting at about 84-1, got down to 82, and that seems when they do the rug pull on the silver market, and we see it come back up, float up to 86 to 88, and that's where they start to buy on the silver market as well. So that's just, again, one factor that you want to look at here when you're trading the precious metals markets. But got any questions, you want to open up a futures trading account, just send an email to info@bluelionfutures.com. Remember that futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.